very much similar things. Right, it's going to give. Oh yeah, you're sharing it to YouTube, right? So you can have the recording and shit. Yeah, right. You're sharing it
All
to
right.
YouTube,
Yeah,
right?
yeah, 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 yeah.
Yeah. All right. Cool. So entry time frame. Want to see like generally this happens again. It's the same thing on repeat. This is why we talk about consistency, right? It's consistency across multiple time frame, across multiple entries, time frames, setups, and the thing that we're looking for. So generally, the thing that we'll be looking on EVC is basically a big box. All right, a big box or longer term stage one. All right, that's the you have to
Mhm.
remember. All right, so now I'm going to share my trading view so that you have a clear idea of how thing actually works. All right. So you should see right now. So here. All right. So my USD CHF actually touches TP. Yes. Based on the market cycle theory. So it touches. Nice. Okay. Forget about that. Now the first thing is, I should say like, for example, right? So let's go to UJ, right? Because it has the most beautiful deliveries. All right. So I would say that right now on UJ, we don't focus on this kind of stuff anymore, like this kind of wick touch, um, or here, or even here. We don't even focus on that anymore. Like we don't give a shit anymore. I'm
Mm.
actually going to change my wait. I'm going to change it to FXCM just so that I didn't have my drawing so badly. So yeah. All right. So the thing that we're focusing on, if I can hide my drawing first, is usually when wait, so if I can change this one to arrow, it's when this kind of moment. Can you see it? Like this kind of moment, where this kind of moment, this kind of moment, this kind of moment, this kind of moment. So okay, I would say what I would do is hold up, select all, put it inside a folder and hide it. So the thing that right now we are looking for is basically like this kind of stuff over here. That's the first thing you want to have, like longer term box, longer term box, um, longer term box. I want you to think in terms of box first rather than ICI. That's the entire thing we'll do, right? You should do right now as per the beginning stage. So I want you to think in terms of boxes, and I want you to think as in terms of long-term stage one. Even if yourself don't actually consider this as a long-term stage one, it's okay at first because you will eventually improve yourself. But the thing that you're looking for is actually this kind of thing, this kind of setups. All right. So you want to look for long-term stage one. So you might wonder, like, what will happen when long-term stage one happens, right? So as I said, what it will happen is consistently over time frame is price will what? Be under 200. All right. It will automatically be under 200. When the price is below 200 under a very bullish market, we know that position is being accumulated. That's the first thing. All right, so literally, when you see this on 5 minute, what you can do is like you can draw a big box just like this, whatever demand validation. Yes, why not? Because it's eventually this big box is an MB, right? It's a fractal MB. So what you can do is this already. You don't have to think much. Target your 1 or 2, right? And it will deliver. Trust me, it will deliver. Look, it will deliver because this is the fractal nature of the market. Of when price do a flush and when price do this accumulation under a very long-term market, this is what it will do, right? So this is like the drawing that I have, the little drawing that I have, I've sent out yesterday and I've sent out just now, and I have do it when we are inside of the Zoom whiteboard. All right, this is eventually the thing like that, and then you can wait. you can wait, right? When there's a big box again, like this, right? This can be a system, literally like this easy, all right? So you can do is like draw a big box consistently, target I wanted to, all right? Let's see, right? Big box, tags in, all right? So you have to wait this point. Probably it's gonna distribute again or whatsoever, but you get me. You get the point. Like you are doing bare minimum work to get this kind of setups. Right? You're doing bare minimum of work. Now, um, this is a very beginner stage, or I would say like a very important thing as you're beginning with this kind of thing because you want to get used to this kind of stuff across multiple time frame. All right, across multiple time frame. Of course, that's the thing you have to. One thing you have to do is wait. Just wait for this kind of setups to be present. All right, and if you look at USD CHF, what do you notice? Right, what do you notice? It's literally the same thing, right? Market gives you a big up move, flush, and then out move, flush again, and it delivers, right? So if we look on 5 minute consistently, what do you notice? This. And then what do you notice? This, right? It's very consistent with the kind of entry and the kind of setups that you have. And 1 to 2 R is actually not insane. It's actually very insane, right? Imagine if you risk like let's say 2.5% because your win rate is so high that you are able to risk 2.5% to 5%. Imagine those 2R is going to give you 10% of the account. Now imagine you are on a 100K account or something. That would be life-changing, right? Just imagine that. So the thing is that you this kind of stuff makes you so much more consistent with your setups. This is the first thing that you should be looking at already, right? Before entering any market, you would be like, this is a good box. Long term, right? This is a long-term stage one as well. Buy, stop it, bam. Here, again, buy, stop it, bam. Right? It's literally the same thing. Now, the market cyclic theory that I am working on just now is literally built based on these ideas of we take the consistency across multiple time frames, but it's only for V and E only, where it's validation and entry only, because there's no need for me to do it on context time frame because when it wants to run, it runs, right? So for example, we go back to 1 hour, let's say. Do you have like the link of the YouTube live stream?
Yeah.
Yeah, can you show it to me so I can tell my friend if he wants to join me, join up,
Uh,
join the live stream. So
oh, join the lunch.
yeah, he's joining the
Yeah,
live
yeah, yeah,
stream.
yeah.
Yeah.
Just let him join here. What's wrong?
Oh yeah, joining Zoom as well, right? Yeah, I might send it to him as well. He's one of my another friend though, so don't worry about it.
Oh, okay, okay, okay. Wait.
Yeah. Uh,
Uh, so will he join here or?
yeah, I guess Zoom, I guess.
All right, all right.
Yeah.
I will share the link also. Don't mind the title.
All right.
I just I don't know what to type.
All right. I'm gonna continue whether he
All right.
joined up or not. But it's
Yeah, yeah.
it's the same thing on repeat, right? The thing that you are looking for is a trending market that is established already. So i.e. the price, all of the MA gets up to above 200, prices above 200 and be consistent with you, right? So at this stage, I wouldn't even consider it yet. I'll wait for the price. At around here, I'll start to look at the market. And at around here, we start looking at the market. And look what it did. It delivers. Because this is the nature of the market. It tends to delivers, and delivers. And notice that the consistency as well, right? The consistency of everything that we're looking at. it's a longer term stage one turns into stage two. That's it's already insane, right? It's already insane as per the thing that we're doing. Now, the market cyclic theory is like this. I divided, okay, so let me actually share my Notion in this case. Notion, market cyclic theory. There we go. Okay, so can you see my screen? Should be able to, right?
Yeah.
Yeah. So what is
Yes.
the market cyclic the market cyclic theory is basically to study when the market is likely to make a move or no, or to study the market is likely not ready yet, or to study if it's still worth to follow on the market for validation time frame and entry time frame. Because back in the day, or back in where I used to do stuff, or back in the day where I used to take a lot of entries, the thing is, I'm not very sure of the market, whether it's extended or it's not extended. So I basically so how do I say? Basically narrow down everything so that I can, using the ICI theory and stuff, stage one, stage two, ICI theory, Wyckoff, AMA model, everything like that, to create models so I can have it's a cycle on repeat. That's why I call it a market cyclic theory. Now, for this, when I'm trading a market, I usually not sure about the market as well. So this is like the context, right? This is context of why I'm doing this. Now, on the context time frame, it's still the same thing. We still want to have this kind of mini sideway or notable sideway action or a mini flush out, right? We're still looking for that. And the thing is, it will be below 200 EMA. That is for sure. That is something that will happen oftenly. Now, I haven't added picture yet. We'll do in the futures, but not now. Now, notice that one thing is when the price gets below 200, when it moves up, it creates a longer term stage one, and it moves up, creates another longer term stage one, and moves up and create a longer term stage one. Now, the thing is, I personally before this, I am not I'm 100% getting in here, right? But I'm not sure whether should I get in here or whether should I get in here. So the market cyclic theory tells me this, so that when the price made its first push above the 200 with a significant volume like this, I'm anticipating a very long-term sideway action like this, like probably around like 2 to 3 hours, probably something like that. And then after that, it just delivers, right? So this is what I call a O1, which is opportunity one, where I should take trades and expect market to run. That's O1. And usually what I would do in O1 is I will held my trade over 5 hour, because you can see like the consistency, right? Just now I saw, I let you saw as well. I do a very big zone buy stop. It consistently delivers like this kind of big move for me. So this is what I'm doing is I will partial 50% out of the 1 to 5, and I will hold it to 1 to 25 for the rest of the closure. That's the first thing I would do. And after that, if I can get in on opportunity two, I personally, what I would do is a 1 to 5. So on O2, I would take a 1 to 5 full RA here, because usually at O2, the market still have the momentum and the power it wants to go, but usually it doesn't have that much strength anymore. All right. So as you can see, O3 is just completely slaughtered the market. This is what it usually have. Now the rules drawing line don't need to matter think about that much, but on entry time frame, it's the same thing. I want to get in at O1, which is AB, and O2, which is CD. Now, if I'm entering on E, I should only expect a 1 to 5. All right, this is with the 1 minute. Do you get me?
Yeah, yeah.
Yeah, it's basically this. This is the market cyclic theory to tell me whether I should be continue to anticipate this market to go long,
Mhm.
or whether it should be starting to short right now. So if we look at a USD CHF trade just now, USD CHF. All right, so it's failing now. No worries. Doesn't really matter. So the first thing, what do you notice is a longer term stage one, for sure. And that is a FMB over here for you to buy stock for, right? Clearly, you can see that, right? And then after that, when we go to 5 minute, guess what we have? Same thing. Price drops below 200, breaks out in insane momentum, and then you do a two, a longer term stage one. So when the price anticipate what the price is doing this kind of mediation with the MA, you should be anticipating a buy stop over here. So guess what? When I am here, if I drop to a 1 minute time frame, guess what? This over here, price below 200 will happen. So let's see. Of course, this is not very significant. It's not very significant, I would say, but it is, right? It is one type of longer term sideway that we're looking for. This is literally it, right? And then guess what? Let me use this one. One, one, two, one, two, one. So this is first. Oh, of course you get a stop out or whatsoever because of this is not a perfect one. For perfect one, you see price below that for a period of time, and then you get in at here. Let's say longer term stage one. So you take this one, and I still hold it because we are inside of a 5 minute or one. If we're inside of 5 minute or one, I should expect this one to give us a runner, right? Because as I said, if we are in O2, the trade that we take is usually 1 to 5 fixed. But if we are in O1, we can do partial at 5 and then let the trade run, right? So we are in O1, just so you remember. This overall is this big one over here is a 5 minute one, all right? So when we have that, look what it did, right? So for example, I personally will not have a bigger just that big of stop, probably at 1.5. Good. All right, and then boom, first partial, and we hold that to 1 to 25. Guess where we are at right now? 1 to 17, 1 to 18, something like that, right? Now, if we go back to market cyclic theory, so O1 is considered as delivered successfully. As you can see, boom, right? Deliveries, and now what we are at, an O2. So O2, what I should do? 1 to 1.5, 1 to 1, 1 to 5. And then look, what did it, or what do we have? Okay, so in O2, I have stated in the notion as well, is that the price doesn't need to come below 200. It can do just cut below 50. It needs to cut below 50 because of why doesn't it need to come below 200 is because of the previous delivery of the market just proven that it wants to go long. All right, so it doesn't have to accumulate position heavily on here anymore. So as you can see, what I did, longer term stage one, so the perfect one should be here, 1 to 5, hit, and this is a full closure. And look what it did, reverse. All right, so that's the market cyclic theory. So if we look at UJ, FXCM, it's literally the same thing, right? I can show you. Just ignore the triple M here. I'm not using it, so don't worry about it. Not important at all. I will get my object tree back. This. Okay. So 30 minutes. Let's go back again, shall we? So first thing here, market is proven that it wants to go bullish. Went sideways, create a notable sideways action, and minute flush out over here. So if we drop into a 5 minute, all right, so if we drop into a 5 minute over here, guess what you will see? The same thing on repeat, right? Sorry for the MA to load out. Same thing. 1, 2, box one or opportunity one delivers right? So if we go into 1 minute as well, when market is in box one on 5 minute, opportunity one, see, this is a very good setup, a very, very good setup. So over here, because on box one in O1, longer term stage one, the market on 1 minute accumulate its position, goes first time sideways, boom, second time sideways, and look where the market goes, right? It just continues to deliver. The same thing goes to here as well. See, it doesn't really need to come below 200s. Boom, sideways for the first time, boom, sideways for the second time, boom, sideways for the third time, and all three. So all three in 1 minute is a fixed 1 to 5. It's like O2 in 5 minutes. I know it sounds a bit confusing right now, but eventually we get it. So here, if you enter here, you will hold 1 to 5. But if you enter here, you do 1 to 5 partial and let it run. All right. So that's the I guess the entire market cyclic theory.
So
Yeah.
yeah, okay. I finished like explaining the the main theory. So we can get into the details like uh the entry and stuff,
Oh, the entry and
the
stuff.
stop loss. Yeah.
Yeah. So for entry, still the same thing, to be honest. Okay, for example, if you're using this one, it is um big up move, longer term
Mhm.
stage one. You can draw a trend line even like this. That's why you see me doing this, right? Do you see me draw this line on my chart?
Yeah.
Yeah,
Uh,
this is literally the same thing, right? Flush out. Along this parallel lines means longer term stage one. Guess what? Boom, buy stoppable high with MA. Now notice that when I take trade nowadays, I want my MA to be tight. That's the first thing. I want it to be literally tight because for the thing to deliver as for our thing right now, it has no reason to not get tight in our suspected region. If it get loose, for example, if it get loose like something like this, you should absolutely not touch it for sure. That's not what we used to see. So you have to buy. So in this case, buy stop this one, stop loss this one. So you get a one, yeah, you get a -1, totally fine because that is what a higher RR lower win rate system gives us, right? And then at here, you completely miss this one until 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 it's here, right? For example, here. Now I will not even get in this one because of I've changed my EMA. So on 1 minute, I only want 25, 50, and 200 because 25 is usually the one that is giving me like the long-term kind of signals, right? So for example, here, it's the same thing. For example, here, price gets so the first time you draw this line is when the price do an impulsive move. When the price below 50 come above 50, you draw this first one, and then you're expecting a longer term stage one. When I mean longer term, I mean really long term. You should see like price doing sideways things like this. And then the most normal thing you can do is you can actually draw a pretty nice triangle with it. This is what I define as a longer term stage one, is that you can draw a very nice triangle with it. All right, so nice triangle. So probably you got your first trade over here, boom, like this. MA is tight as well. The MA is tight as well. So you get your first trade running to a 1 to 1.5, right? 1 to 1.5. And of course, you can scale to the right. You can scale in. So for example, if you want to scale, I personally scale in here because it touches 25. So scale in again at this ICI, boom, 1 to 5, like this. So the thing doesn't change. It's still what? Longer term, longer term stage one. Oh, longer term stage one. It's still the same thing across multiple time frame. Did you notice that? It's all longer term
yeah, bro.
stage one. Yeah, even this one as well. See what you can do with it. you can draw a triangle with it, right? You can draw a triangle with this one. Now, the same goes with here as well, right? You draw a triangle with it. This is what I define as a longer term stage one has been done, where you can draw a perfect. When I mean perfect, it's literally perfect triangle like this. So for example, as for the USD station, I will have this one, right? Guess what? Oh, even though this was not that perfect, but when I'm not entering here, when this delivers, when it comes back to mitigate my 25, look what can it do, right? It's the same thing on repeat. So did you notice like how the similarity and how time frame, how everything has come together? Yeah, so that's like the entire thing. So the first thing is still you want to get this on your C first before you really want to talk about this. All of this happens after this. Okay?
So for
Yeah.
the entry, like the first, we should expect like the most probable entry on the first what is it?
Yes, yes.
First flat
First
out, whatever
opportunity.
you know, flat out,
Yeah.
whatever.
The first
What's
longer
that?
term
Yeah,
stage
yeah,
one.
yeah.
That's the yes, we should expect
In,
more from it. Right? We should expect a
no,
lot
in
from
one
it.
minute, in 1 minute. I mean, in
Yeah,
1 minute, bro.
yeah. It's
In
it's
1 minute. Yeah, same,
yeah,
right?
here, yeah. You should expect a lot from it.
Uh-huh.
Yeah, that's the thing, right? And after this, the one thing you should do a lot is you should collect a lot of pictures about this kind of stage one first, right? This kind of stage one when it occurs, when it delivers, right? You want to look for. So the thing I do is I look for the delivery. So the first time you do, you don't actually have to go to replay mode. One thing you have to do is you want to look for this, and then before it, it's like this kind of long-term sideways price action. Then you take a screenshot of that. Look how it's interacting with MA, how the MA looks and stuff, right? So now the MA I'm looking at is when it wants to go, it will create like a dent for me. This is something that I'm looking for as well. So the dent I'm talking about is like this kind of dent. Do you see it? Like this, and then just
Mhm.
go. Yeah, that's the kind of dent you want to see. When this kind of thing happens, it usually provide you with a very, very
But
solid move rather than,
uh,
yeah,
for,
what?
for the C, uh, do you need like
Mm-hmm.
a bigger, like stage one, or just like small that one can work also? Is the one in the
Yeah,
middle?
this
Just
depends on your experience as well. This depends on your experience as well. I personally trade two kind of flush out. I trade two kind of stage one as well. As you can see, I trade this kind. I trade this kind of big flush out. You can wait. I know a lot of people in mentorship did this kind of thing. Wait for this kind of big flush out, and they are super profitable with it, right? You can wait for this kind of big flush out to follow it again. All right. So it really comes down to you. It depends, right? It goes back to the same good old advice, which is it depends on you, the testing you did, right? You can say like for someone, right? For someone, this can be the flush out as well, but for us, it's not. You get me?
yeah, yeah, yeah.
Yeah. So the thing that you have to be is that you have to be. Ooh, look at AJ delivering very very nicely. Here, yeah, this is the kind of 1 minute flush out I would take, but probably 5 minutes in setting up for us. Yes, as you can see, 5 minutes in setting up for us. So I will just let this one delivers. So I'll probably incorporate the market cyclic theory inside of my context time frame, but that wouldn't be that soon because if I incorporate this one in my market theory, so let's see, right? Market cyclic theory, right? So First move out of here. Not a very long-term stage one, but still okay. Second move. Third move, right? O3. Now we are on O3. So basically everything we take in here will be 1 to 5, 1 to 5, 1 to 5. But look at how it delivers, right? So I don't want to get it on like my context time frame yet because I want to see my context time frame actually continuously delivers. That's the entire thing. But that could be so useful when you are trying to stay out of the market. But we know one thing, right? When the market tends to delivers, it will continue to delivers, right? It will continue to delivers. Not like suddenly we give you this kind of flush, which we're usually looking for in a 5 minute and a 1 minute. We don't want that in 30 minutes because when we use context time frame and then we see price gets below 200, guess what is going to happen? Chops. And you don't want to get into chops, right? So that's like the kind of like the entire theory of it. So as you can see, like GU, nothing to do unless it do this, right? Because of chops inside of here. EU, same thing. Now EU starts to setting up, but I will wait for a bit. Maybe it comes up here and then it starts to set up. Then I will look at it. Right now, I think it still need a bit more time as we have just started. In the market cyclic theory, we've just started this. Of course, we should expect the deliveries, but in my context time frame, I just wanted to see it move first. That's what I did, right? And probably look at NAS. Like if you want to backtest, do NAS. Like few days before this, it's very, very beautiful, right? Very beautiful. And guess what? When prices under this, falls off, and one of chops, right? Here's chops. If according to our market cyclic theory, you can see it's very much same thing, right? Price comes, one, O2, O3. O3 is here. And then look what it does. Falls off and then backs into chops. Right? So the market cyclic theory is fractal on its own as well. So don't worry about that.
Yeah.
When after O3 it wants to run, we let it run because maybe on some time frame it's setting up. So it wants to run. So but we don't take shit after O3. That's my rules. All right. If it wants to run, I will just manage my position. This is the time where you can manage your position from here. Right. That's a good time for you to manage your position rather than get in a position. All right. So that's kind of like I'll say like the one thing that I've discovered in my so-called like a small research where this is the kind of stuff it tends to deliver. All right.
Yeah.
So yeah, that's all from the content, like the stuff that I want to share because this is what I get at the moment. So don't expect too much from it and do a lot of back testing as well. That's for
Yeah.
sure.
Since like
Yeah.
it's what is it? Not really using that much of what's that? What the indicator, right?
Yeah.
The
Yeah.
manifest indicator, like the accumulation, reaccumulation stuff, right? So,
Yeah. Yeah.
so is it better if I like doing backtest in FX replay first, or what? I mean, I
No.
can,
No. 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 No.
no, why no?
Yeah.
I never.
Yeah.
Mhm.
Because of the first thing you want to get very, very familiar with is the
Mhm.
model because we base everything off of models. The reason why we can take trades inside of this flush, inside of flush at here, right? Inside of
Hey,
flush at here,
bro.
it's because of
Share the
models.
screen again. Share the screen again.
Oh shit. Sorry,
It's out
sorry,
here.
sorry, sorry, sorry. Yeah. Okay, you should be able to see, right? So,
Yeah.
the logic is if we the model we were trying to get into trades with models. Why can we get in trade at here? Why can we get in trade at here? Right? It goes hand in hand with the model that it gets. So I would say like on third, you should heavily rely on your indicator on 30 minutes, the accumulation and
I see, I
reaccumulation,
see.
or else you will be very confused. But there's one thing as well where you can blindly just find like this kind of delivery market, right? Rather than you backtest when this kind of price action occurs, where I do that shit a lot, right? I try to anticipate this and go, and of course it goes, right? Because it goes hand in hand with the models, right? It goes hand in hand with everything that we're having. For example, why do I look for trade here? It's because of wait, broke out, broke down, broke out, broke down, broke out, broke down, broke out, broke out, broke down, broke down, broke down, broke out. I know that we are inside of a very choppy environment, and when the market delivers such an impulsive move, it turns this kind of price action into accumulation, and then another push. So that makes accumulation true, and then a long-term sideways. So I know it delivers, right? But this kind of stuff require you to have a lot of experience and stuff, and you have to do like the back test a lot. All right. Oh, and one more thing. Is usually when flush happens, I don't want to see sorry, this kind of big black candle. This kind of BBC, I'll say.
You see, yeah.
Yeah, I don't want to see this kind of BBC because this this just means that the prior move is not sustained by money where this kind of shit can happen. So I can show you on I believe it's AUDJPY. I actually studied about it because I took so much else inside of that region, so I decided to study it. I don't know it's where again, but I'll try to find it so that I can give you. Yeah, it's here. Perfect, perfect, perfect. So look, this is when back in the time I was not utilizing everything I have right now. So I took one, two, yeah, I took two minus one inside of here, where you can see insane out push and insane out push, right? This just indicates that the market's not ready yet. That you should not do anything about it. And look, the place I enter here, you can't even draw like a big triangle inside here. Yeah, maybe here, right? When the price reaches here, but look, it never gives you an entry, right? So this kind of action, you should totally avoid it, all right? Because that means chops, because it cannot sustain. But over here, perfect, right? This is perfect as the MA gets tied together as well. You can see MA very loose, right? Very loose, right? This is silly mistake, because the MA is too tight, but I don't know why I take it. So, sometimes it's just live, you have to deal with a lot of experience as well. So yeah, I will 100% be inside of this trade when I was in front of the computer, but sadly I was not. I was in front of the computer when 8:05 when it starts to deliver stuff. So I can't complain, but yeah, it is what it is though. But look at it, right? Look at what it's the same thing. 1, 2, 3. Right? 03, now it delivers and fell down, right? So yeah, market cycle theory, same thing. Same thing. Yeah. Yeah. Yeah, so you should definitely go back test it. If you have questions, just spam me. I will definitely answer your
Okay.
question. Yeah, because this is very experience based. Yeah. You know how I gained this much experience and I gained this kind of theory? I just walk through the trade talk.
Straight talk.
Literally. Yeah, literally. You just have to read that. If you don't read that, yeah, you're good to go, basically. Because in that, people will tell you how they make mistake or how they anticipate a move, literally. So you don't have to worry about this kind of stuff anymore. So definitely go read through Trade Talk. And then just now I told you about the box. It's webinar. It's actually on public as well. On public, I forgot which videos. Actually, we should look at. Oh shit, it's not this one. So boring. I decided to watch like car videos and stuff. Uh, so types. Yeah, buy the box. That's this one. So if you go into here, if you look at these two videos, wait, hold up. How do I do annotation? God, whatever. These two videos is basically the stuff I told you, like buy the box. This is two public videos, and in like the webinar 156 to 59, just today, just released today, you should get a very good understanding of this as well. Right, buy the box, and it delivers. Right, basically it's throwing the dart. So you definitely have to watch
Ah,
webinars.
right.
Yes,
So screen
yeah.
again, maybe.
Ah, shit. That's the problem, right? So that's why I'm wondering why I can do annotation. Yeah, it's crazy. Right. Yeah, yeah, yeah. All right. So public we have two videos, which is this one, the simple system and the buy the
Uh-huh.
box system. Yeah, this is the two where I primarily talk about you buy this box and just go. The 1 to 2 R system. And then from 156 to 159, I believe today, we are stopped at 159. I haven't watched the most recent one, so let me check it real quick. Webinar recordings. Yeah, it's 159. So this three recent webinars talks about this, right? And then yeah, and then in system, the market cyclic theory here, this price under 200 thing is I noticed from the system. This happened in the system, and it literally meant literally tells you that when the price move above 200, buy stop this box, and there it goes. Simple. It's crazy how simple the system is, right? But it's a high win rate, a low R system. So basically, you can spam one over here, you get to 1 to 2, and then get another one here. Funny enough, it delivers, right? So that's a +4 steady in your pocket, right? It's crazy how easy this one is. But we as trader will try to improve our stuff over the time. So yeah, definitely go watch those webinars. It inspires me a lot. I've been watching webinar from 140, I would say 145, if I'm not mistaken, to 159. Yeah. Actually, you should watch from 100 plus, 100 to 159. And in this week, by the end of this week, Ment will be releasing a completely. Do you remember the new member section he's talking about like a few months ago, like
Yeah, yeah.
last month? Yeah, he will be releasing that at the end of this week. So
Mm-hmm.
definitely check that one out as well. But I believe I will do that for sure. But I would just stick to my market cyclic theory right now, as I've seen it work so many times. And yeah, you can be very profitable with this one, even if you do this one. It's crazy. It's crazy. Even if you do this one, right? Probably this is what I would do as well because it's a 5 minute entry. I can just throw it on here and not look at the market anymore. Yeah. So yeah, perhaps who knows, but
Yeah.
not right now. Yeah. I'm still training. I still want to get a lot of picture. So I'm not going to enter my live right now. So as you can see, my live it's on $16. So I've
Yeah,
lost
yeah.
four, but it's all right because of revenge trading and stuff. But it's all right, totally fine. I learned a
Yeah,
lot
yeah.
of things during that moment, so for sure. I suggest you to get in 20 as well if you are
Mm.
very, very familiar and confident with your system,
What's your broker
right?
name? What's broker
Oh
you
yeah, I
use?
use Pepperstone, our good old friend.
Oh, so
Our
you
good old
deposit to Pemstone.
Yeah, it's
Okay.
fast as well, so don't worry about that,
Mhm.
Pepperstone. Because my friend actually been withdrawing money through that. He withdraw like a couple of thousand
Wow,
US dollar. Yeah,
really?
yeah, couple of thousands. I have friends do that. So yeah, 1,000 and stuff. No, not that crazy. Because I know that on the trust pilot, not mistaken, they say they'll be consistently withdrawing like 10K, 20K, no problem with that Pepperstone.
Okay. No,
And
just
it
yeah. I mean, like I will check on because like is it support to transfer like for withdrawal to local bank here or no? Because yeah, every country is different. Maybe
yeah,
you know
that's something
maybe
that you should
they have
definitely
a
look into.
yeah local
I
bank
believe
transfer.
wait.
All right, let me check it
Okay.
out.
Yeah, you can withdraw. Wait, I'm gonna check it real quick. Can I withdraw it using um I think you can't withdraw using like crypto stuff. Maybe I can log into my one. I'll see. Log into my account. Log in. It's very laggy. Nah, just don't worry about it. I think you can do that. You can do that. So don't worry about that. Speaking of that, this is a great big box. So you can buy stuff like this. Stop loss, still slow. 1 to 2. Just like this. And if you have market cyclic theory, right, you should be very clear that you can get entry at here, get entry at here, here probably to like wait for a reset before 200, below 200, but it don't. So
Oh yeah.
yeah,
You can I mean I can withdraw and
Indonesia, it's fine.
yeah. I think it's
Yeah, it's
fine. I
good.
just asked the ChatGPT if it can.
All right,
I
should be
have
fine.
I have GPT-4, so you can browse it.
Yeah, should be fine. Don't worry about that.
Yeah, I bought GPT-4 for to
Yeah,
help me.
thesis. Sure.
Yeah,
Yeah,
just like split
I know.
split with my friend. Like, split the bill.
Yeah, for sure.
Yeah.
GPT-4 is so good, man.
Right.
The answer
Yeah.
is so much accurate and stuff. Yeah, I'm
Yeah.
waiting for the new member section so I can see like where I can improve my market cyclic theory and stuff.
Mhm.
Yeah. So can I get in this kind of move again or whatsoever? So yeah, I guess that's all from me. You should definitely
Yeah.
backtest,
Right.
trade on your own risk. That's all. That's all I have to say. Yeah. All right.
Yeah.
So
Let me